Right, guys. Hi, I've had to disconnect and reconnect, so hopefully you can hear me now. Let me know you can hear me, guys, and then we can proceed. So, presuming that you can hear me, then um, we're going to start seeing some important events. Okay, great stuff. Thank you. We're going to start seeing some important events coming out, um, starting Tuesday, right? So, we've got the UK's claimant count change. Now, I glazed over it. I think we had some hawkish comments coming out from one of the Bank of England MPC members. Um, that did little to really lift the pound, though, did it? But anyway, so that's going to be the key event for Tuesday. Let me just double check that I'm not missing anything else. Yeah, okay. So UK jobs data is what we're going to be looking at. And it was Bank of England's man that was speaking. And I believe that the comments were hawkish. Um, the Bank of England, in that respect, is expected to raise rates 25 basis points when it next meets. I'll have to look up when they next meet. I can't recall when that is, but it's coming up. So that could lift the pound, keep the pound supported, especially in an environment where the dollar is feeling a bit of pressure. But generally, the day was governed by stronger equities. So we'll flip back to the chart and we'll check out US 30. So we had a pop high, dropped off again, but generally well bid, making fresh highs in this bullish cycle. And the S&P ending nice and strong along with the NASDAQ leading the way. So essentially what's happening is we're waiting for a slew of key economic data this week in the US, as well as the Euro area, and also Asia Pacific. We've already seen that sentiment around China has been improving rather, given the breadth of policy announcements from Beijing. Right, so looking ahead for this week, we've got the ECB as well. And there's been some hawkish pricing into the ECB. There's expectations of a 25 basis point hike later this week. So the Hawks are also out talking about a further rate hike after that. So it'll be a well debated decision this week. All right, so keeping an eye on that. But I think the key data for us, especially trading the US session, is going to be the retail sales and August inflation data. So, not that it's expected to alter prospects of a hold at the Fed this time around, but it will be more driving sentiment around the November decision. All right. So, just keeping that in the back of our minds. But we can basically rely on our market structure and technical analysis to steer us through the complications of all of this red data that's coming out this week. So sticking to that, and do let me know if you guys have got anything that you want me to look at in particular. We've already can't see my screen. No, I haven't shared my screen. I should be sharing my screen 1 minute. So there was nothing really too key that you've missed out on, but I'll share the screen and So I was just noting how high really that the stocks were. So that you're seeing now with the Nasdaq, S&P um, flying high, US 30 a bit of a laggard, so it might be an opportunity there going long. So someone asked me, are there any opportunities for the US session? Well, we were looking at gold specifically, and it popped up to say hello into resistance and then trickle back into our preferred area to be going long. So that might be a prospect if you're not already in the position that this was explained earlier in the session. We're looking to buy gold low at the lows of the day. So got in nicely there at the order block lows. So remember, displacements are often followed by retracements. All right, so um, I was watching that creep higher, creep higher. It's tempting to get involved, but I'd much rather be buying at a discount. And given that today is Monday, and we're not expecting so much volatility on a Monday, you can be rest assured that you'll see choppiness. And so long as you're eyeing the market structure and looking for the optimal areas of entry, then that's a nice looking scenario at the moment. But uh, Asia usually takes some time to get going. It's not really until Tokyo, so 8 o'clock New York time, that I'm looking for opportunities, or an hour before Tokyo opens. So that the same sort of scenario with New York. So you got the New York Open 7 o'clock in the morning, and then you've got a good couple of hours to look how market's setting up for the Wall Street Open, that grayed area on the chart. So that would be similar if I was trading the new Tokyo over here. So this is Tokyo. I'd be doing something similar on my charts there to set me up. So um, there you go. You've got 6 o'clock New York time. Give it an hour or so to let the market sort of set up for you, and you transition into Tokyo, as I've got here on my chart, 8 o'clock New York time, and that's where you tend to see the moves. So if you're looking for something in Asia, then I'd be patient and wait till until around the Tokyo set open and see if there's anything that's setting up. But for gold, so we've got one, two. We've only really had two pushes into the low. I mean, perhaps these will be the lows. You might see a third attempt to come lower in and around New York, Tokyo, maybe to ride higher. So I'd monitor that. We are now technically, I'd say that we're on the backside of that bearish trend. Um, I mean, the low was down here, and we broke that higher low over here. So the market is technically in a bullish environment. Okay, so that's resistance, but we did break resistance here. We trickled back lower, so perhaps this will continue to creep higher. No idea. I don't know if it's going to pop down again before another, for a retest lower before another move up. But generally speaking, what we're looking at here is the US dollar. Yes, I have shared my screen, Zeb. We're looking at the US dollar and seeing how it's underperforming at the moment. We've got this W formation on the weekly chart there. Can you see my screen all right, Zeb? If not, I can send you a screenshot. But then you've got this W formation of the weekly chart and the dollar. Prospects of a move lower. We talked about this at the end of last week and this morning. So that is the criteria for looking for shorts. On the day today itself, we had Friday was a first red day. So today we saw the follow through. That was our thesis. as highlighted. I'm using these tabs. So red for bearish, green for bullish. Right, you're seeing a wheel go around. Right, that's happened in the past. Maybe if you log out of the meeting and then log back in, and keep in mind also that I'm recording this. So very shortly after we disconnect, I'll post it in the chat room and you'll be able to watch it on my YouTube channel, a repeat. So you won't miss anything. But if you log out and log back in, that should resolve it for you. So moving on, we've got that dollar that's declining. It's heading down towards a support area currently in here. I'll stick that with a green background to show that it's a potential support area. All right, so give it an area of support that it could come into. Now, it's not to say that we're not going to get a correction first to move up and then continuation to the downside, but let's have a look. I mean, momentum's with us, well, with the bears. So broke structure, coming down, continuing to come down. Bit of a sign of deceleration here on the lower time frames, that will look like. You'll have that correction there on the hourly, you see. So we've come down, but again, we've broken structure here. So this then would be regarded perhaps as resistance on any corrections up into that resistance area. May well be met with sellers. So we're still on the front side of that sell-off. So there's no reason to start banking on a turnaround in the dollar yet. So down we come. So perhaps get rid of this. So impulse correction up into resistance for a downside continuation. All right, and that would play well for those that are looking to get long or stay long of gold. Now, there's quite a few questions. Why is gold selling off at the same time as the dollar? Yeah, we've had this continued situation with Discord. I know exactly what you're seeing. You're seeing, oh, I don't know about a wheel cog, but before it was floating, sort of, I don't know, like purple fireflies floating around the screen. I don't know if that's the same thing that you're getting now, but some people were experiencing that before. So we've paid for a number of upgrades with regards to the service that we're getting from Discord, and it had solved it. And this is the first time I've heard it for a couple of weeks that it's come back. So I do apologize. All right, so still looking for dollar weakness. These yields are proving very sticky, but as I've said before, and I'll say again, once you get these consolidations, think of it like a spring, a coiled up spring, and at some point it's going to, decoil. So all that energy that's coiling up is going to likely result in a firm breakout move. So Monday, remember, is setting us up for the week. So I'm not looking for much volatility. I mean, I'll plan for it and I'll set my targets to the extremes, but I won't be disappointed if we end up breaking out, coming back in on the inside, and so on. So Monday setting us up for the week. So you can get range expansions on a Tuesday. So if we were to break out of these coils in these yields, Tuesday could be the day, and that could impact the US dollar one way or the other quite significantly. Maybe we've already seen high for the week. If Monday was the high, perhaps this is a continuation trade into Wednesday, and ahead of Thursdays. No, bear with me. Wednesdays inflation data, well, consumer price index. All right, so jumping to, someone's asked me to look at the US 30. So we looked at that a moment ago, and we were talking about prospects of an upside continuation, playing catch up with the NAS and S&P. So there's the NAS, nice and strong up into resistance. S&P, nice and strong up into resistance over here. Whereas the US 30 has been the laggard, as often is the case. So we've had a pop up, pull back, break of structure here. So actually, that's something to take note of. In fact, that's a break of structure over here. I don't know if you can see that in the hourly chart. So the broader trend line is as you see it, but on the inside of that trend line, that bullish trend rather, you've got this scenario where we've made a high. Well, there's the high over there, isn't it? So that low here was the higher low before the higher high. So, and then we came down to break that. So therefore, we are actually in a bearish environment, micro environment. So perhaps we are actually topping out for the time being, and we've come down lower for the day ahead, perhaps. And if that were to be the case, then we would need to see upward movement in the US yields, and therefore the US dollar could be coming up here for a fair period of time. So we're not going to see a fast move to the downside. So maybe we're coming up and consolidating across. But anyway, that's all speculation, isn't it? We have to trade what we see, but good to plan for what could eventuate. So that's the US 30 covered. Any questions on that? So we've covered gold, and I've been asked to look at the yen against sterling. So this is front side of the bearish move. All right, so let's pull this out to a longer term chart. Let's get our bearings. So long-term bull trend here. Yeah, we're still long-term bull on this. The line in the sand is down here, 180.40. All right, so what could be happening here is we're decelerating in the bullish trend and starting to break down towards that very important 180.40 level. On the 4-hour chart, zooming in, we're making lower highs, pretty much thereabouts. So bearish sentiment on this chart. Analysis, bearish technicals. So you've got this bearish impulse, correction, prospects of a continuation to the downside. And this could be regarded, all of this in here is resistance. That's the 4-hour chart. And slight break of structure here, but I wouldn't class it as that because we've got that gap. So I'm not going to count that as structure. So biased bearish. dollar yen. Um, so we had our pump and dump. So that's been done. Uh, bullish trend line, W formation, neckline, support being respected here. But nevertheless, we are out of level three. So that was one, two, three. So that was the range of the month, last month. And we've come up 300 points, pips, broken out of here. So we've got long traders trapped that were trying to break out to the upside. So they'll be keen to break even. So when that market runs away from them, moves back up, they'll have their sell orders to break even on their buys, and that's for keeping a lid on the price to the downside, perhaps. So the theory would be that failed attempts to move in are going to be met with strong supply for a continuation to the downside. That will play into the bearish US dollar story. All right, so that's what I have on dollar yen. Any questions on that? Before I move on, we'll look at Aussie yen in a minute. Um, right, Aussie yen. Okay, we'll look at euro dollar as well. Aussie yen. Double top highs here. Support. Support here as well. Horizontal. So you've got the main area of volume there acting as support at the moment on the hourly chart. Resistance. Sort of a trap scenario. Um, trying to move out of this bearish trend. So it's actually breaking that structure over here. So the lowest point on the chart was where? This or this? We'll call it there. So you've got, well, these levels here that were broken on that move up, came back in on the inside, and we're trying to continue higher. So perhaps there's a target on last week's highs over here for the meanwhile. And if we're risk on, you'd expect the Aussie to perform well. So with these US stock indices doing well at the start of the week, you might get some follow through with that with in Tokyo and Australia, and that would likely underpin the Aussie, which trades as a proxy to um, sort of the risk blocks such as commodities and equities on a global scale. So fundamentally, you could argue a bullish case for the Aussie, but whether you want to be buying it on the inside of last week's range, you probably prefer to have bought it down here rather than, because I mean this could go one way or the other very easily, right? So, um, but Aussie yen tends to performs well in risk on environments. Having said that, it didn't do so well on Wall Street, did it? It just moves into the rally. But now that that's been done, then perhaps the path of least resistance is to the upside, in line with risk on sentiment. Looking at the euro now. So the euro is essentially a mirror image of the US dollar, and we're in anticipation of a pullback to continue higher, targeting last month's lows over here. 107.70 is something I was talking about earlier on in the session, and that could well continue. So we've moved up. We've broken Friday's highs. So as I keep saying, most breakouts fail. So that's a breakout that could fail, and then we can pick up the pieces at a better place down below to continue higher. So in that respect, you're going to be at the top of this consolidation, but we're moving into a new day. So you'll be looking to buy low at the low of the day to ride high. That would be my bias. Peak formations, rising market, higher lows. Nothing really here indicating at all that we're about to flip over to the downside. And if I just get rid of all of these markings altogether, and come back to a clean chart, and just monitor the the price action here, we've actually got resistance area here that we're targeting, and we've got this W formation, and the right hand side of that is in formation at the moment. So if that completes, that will be a textbook scenario really of a move into resistance and a subsequent move back into the neckline, and then from there on, who knows. But that would be my outlook for the euro at the moment. But bearing in mind, of course, we're bearish overall because we're in a downtrend. So that's on the daily chart. And then on the hourly, again, you've even got a W formation here, haven't you? So hourly W formation. Move back into test support perhaps for continuation to the upside. And in that respect, you can measure the rally with the Fibonacci and note that a 50% mean reversion of today's rally, or the US sessions rally, comes in at around 107.40-ish, which tallies up pretty much with those old highs. So this could here act as a support if it doesn't come all the way down into the 61.8. Right, that's obviously not to say that that's what it's going to do, but to me that would be the most probable scenario. Other than that, it's continuation to the upside. Now, if something freakish were to come out and see this dollar take off, then obviously, well, we need to accommodate for that, and a break of these lows could be significant in that respect. Break of 107.20, let's call it. I like to keep it round 16 and 17. I mean, they can be respected, and I suppose often they are, but I like to go by the round numbers. It's just my little brain handles that better. Right, so around about 107, well, it's in the middle, 107.15. All right, so a break of that could determine a downside continuation. And dollar CAD I'm being asked for. Dollar CAD. So note, guys, I mean, everything that we talked about this morning, it all played out. What was bullish turned out to be bullish, and what was bearish, such as dollar CAD, turned out to be bearish. And this, again, this is not me plucking stuff out of thin air. This is all based on the education that I'm trying to give you the weekly template, the trigger days, the flow, the ebbs and flow, and essentially what it is order flow. And once you'll get an eye for it, but breaks of structure, breaks of trend lines, how many days it's taking to set up. You know, if it's a 3 day, if it's a day, 3 days of setup, then it's more likely that you're going to see a bigger move than say just a 1 or 2 day setup, if that makes sense. So with this Canadian dollar, for instance, I mean, we've got a market here that failed to break higher, right? So we had this first red day scenario. So this is a trigger day. And as I said in the meeting, these are likely to be met with continued supply. So we didn't get the pull back right up into the resistance area. In fact, we got an opening gap and just a downside continuation. But the downside was what we were playing for. So that was a short below these lows for a continuation trade because you've already had the pullback here. So in this respect, you have the impulse correction, albeit it didn't find any more highs, it just blew off. All right, so dollar CAD, what can we expect from here? Let me just clean up the chart entirely. We'll just start fresh. So we had Thursday over here, highs failed to break out. So it's worth going backtracking, and helps you note where you are. So we failed to break out. We've pulled back inside, okay, and we've broken structure. So the structure was over here. So we broke that structure there. So that gave way to a downside continuation. That area can be regarded as resistance between those lows. So you got the downside impulse correction. So these lows can be regarded as potential resistance on a pullback. All of this area in here. And we've come into what could be a fast move down into test. A couple of weeks ago, the lows down in here. So it depends on risk sentiment. If risk sentiment continues to improve, then that would benefit the likes of commodities such as oil, Canada's biggest export. So that would be favorable to the downside due to Canadian dollar strength. Okay, so looking for shorts, looking for perhaps some correctiveness in the dollar as we talked about, maybe a move up to come down. But it would appear to me that we've already sort of come up strongly and we're heading lower. But this leg here, we haven't broken any structure, but that is an impulse. We've got a current correction for the move lower. But as we move into Tokyo, I wouldn't expect there to be any major movement until towards Tokyo Open. So you could see some consolidation, a grind higher into potential resistance here for the move to the downside, a continuation lower. Any others, guys, you want me to look at? I think we're pretty much covered across the board there. All right, so do let me know. Otherwise, I'm going to call it a day. Okay, Euro Yen. Euro Yen. Excuse me. So front side of the bearish trend. I'm going to take this out to a bigger chart because I can't see what's going on. So bullish cycle, looks as though it's starting to peter out, that bullish cycle that we're in. So this could be a topping scenario. All of this trapped longs to pull away from those that were looking for that breakout. They were heavily punished for going long at that point. Move lower, correction. So you got the railroad tracks here, double top. So bearish impulse, correction, continuation to the downside could be on the cards. We've already started to pierce and chip away at that structure point there. This is on the daily chart. So on the lower time frames, that will be a close. So if we look at that, you'll see that we've closed below that line on the 15-minute chart, right? So that's technically a break of structure because we're looking for shorter term moves. Excuse me again. And finding resistance. Now, euro yen is obviously determined by what happens between euro dollar and dollar yen. All right, so whichever of the two is going to be the strongest or weakest, the dollar or the euro. Um, so if the dollar is weak, euro dollar should remain firm, and that will make it a hard sell in euro yen. Even though it might trickle lower, you might not get the blow offs that you could see, just by trading, say, dollar yen, shorting dollar yen instead of euro yen. But depends what you see in your charts. If you get the setup, then go for it. Okay, guys. So does that answer your question, Top Cat? And if so, I think we can call it a day. You're very welcome. Again, really appreciate you guys for being here. Thank you as always, and good luck. See you tomorrow morning. And for those trading Asia, good luck. Remember, it's Tuesday. You've had Monday, so lean against what's happened on Monday to build your base case for what's happening on Tuesday. Beware of sterling data coming up. Okay, guys, have a good one.